call to the warrior in you, to the healer in you, to the king, the queen, the creator, the destroyer in you. Every single day, we are called to walk in our purpose. Answer the call. Lay down your burden and anything that holds you back and take your rightful place. The battle is everywhere and it's right in your face. Let's go.
Welcome to Magnets, Crystals, and Pyramids. Success is your destiny. Yes. Love, wisdom, power. Remember, always who you are. Yes. Yes. I am. Love, wisdom, power. Yes. Yes. I am. Love, yes. Power. Yes. I am. Yes, I am love, wisdom, power. Yes, yes, I am love, wisdom, power. Master. Yes, I am. Yes, love, wisdom, power. Yes, I am. Say yes, to yourself. Yes, I am protected. Yes, I am master. I am relaxing.
Okay, greetings, family. This is part 2 of tonight's program. We're going to call our brother, Professor Muhammad Bey, and bring him on. This is the flyer tonight. Let me bring him on right now. Okay, so bear with me just 1 second. Hold on. Hold on 1 second, family. I'm just pulling up our brother's number. Professor Bey. Okay.
Greetings and peace to the gods.
Greetings, brother. You are live on Magnets, Crystals, and Pyramids, Professor Bey.
But thank you, sir. I may have a few testimonies. If they're on, we'll let them do theirs.
There's only
If
one
not,
so far.
That's good. We'll let them do. After I do the prayer, we'll let them say what they need to say. And if anybody else come, you can let them do theirs, and we'll get on into the show.
Okay.
I want you to sit back and drink your tea tonight.
Oh man, I'm going to drink some tea right now. But you know what? What I do have to do is I have to post the parts that you just sent me. Yeah. So go ahead, do your thing, and I'm gonna post those now.
Okay. Thank you, sir. All right. Allahu Akbar. Allahu Akbar. Allahu Akbar. Allahu Akbar. Allah is the greatest. Allah is the greatest. Allah is the greatest. Allah is the greatest. Shadu la ilaha illallah. Shadu la ilaha illallah. I bear witness that there is no deity but Allah. I bear witness that there is no deity but Allah. Shadu anna Muhammadan Rasulullah. Ashhadu anna Muhammadan Rasulullah. I bear witness that Muhammad is the messenger of Allah. I bear witness that Muhammad is the messenger of Allah. Hayya ala salah. Hayya ala salah. Come to prayer. come to prayer. Haylallah, haylallah, come to your good, come to your good. Allahu Akbar, Allahu Akbar. Allah is the greatest. Allah is the greatest. La ilaha illallah. There is no deity but Allah. Haylallah, come to your good. As-salatu kahiram minam ni'am. As-salatu kahiram minam ni'am. Prayer is better than sleep. Prayer is better than sleep. Assalamu alaikum wa rahmatullah. Peace be upon thee and Allah's blessings. Assalamu alaikum wa rahmatullah. Peace be upon thee and Allah's blessings. Thank you, family. That ends the prayer. I'm going to read you all something from both of the books so people would understand that I deal with both books. Okay, I'm in the Bible. Ecclesiastes 10, verse 11, 12, 13, 14, 15, 16, 17, and 18. A serpent may bite when it is not charmed. That's verse 11. Verse 12. The words of a wise man's mouth are gracious, but the lips of a fool shall swallow him up. Verse 13. The words of his mouth begins with foolishness, and the end of his talk is raving madness. Verse 14. A fool also multiplies words. No man knows what is to be. Who can tell him what will be after him? Verse 15. The labor of fools wearies them, for they do not even know how to go to the city. Verse 16. Woe to you, O land, when your king is a child, and your princes feast in the morning. Verse 17. Blessed are you, O land, when your king is the son of nobles, and your princess feast at the proper time, for strength and not for drunkenness. Verse 18. Because of laziness, the building decays, and through idleness of hands, the house leaks. And I'm going to go to Proverbs. I'm in Proverbs 16. And we're going in verse 16. 16, 17, 18, 19, 20, and 21, 22. Verse 16, Proverbs 16, 16. How much better to get wisdom than gold, and to get understanding is to be chosen rather than silver. Verse 17. The highway of the upright is to depart from evil. He who keeps his way preserves his soul. Verse 18. Pride goes before destruction, and a haughty spirit before a fall. Verse 19. Better to be a humble spirit with the lowly than to divide the spoils with the proud. Verse 20. He who heeds the word wisely will find good, and whoever trusts in the Creator, happy is he. Verse 21. The wise in heart will be called prudent, and sweetness of the lips increases learning. Verse 22. Understanding is a wellspring of life to him who has it, but the correction of a fool is folly. 23. The heart of the wise teaches his mouth and adds learning to his lips. That's the Bible, family. Give you something short from the Quran here, and we'll go from there. I'm in the Holy Quran. It's called Al-Hajj, the pilgrimage. Al-Hajj means the pilgrimage. Chapter 22. In the name of Allah, the Beneficent, the Merciful. O people, keep your duty to your Creator. Surely the shock of the hour is a grievous thing. The day you see it, every woman giving suck will forget her suckling, and every pregnant one will lay down her burden. And thou wilt see men as drunken, yet they will not be drunken. But the chastisement of Allah will be severe. And among men is he whom disputes about Allah without knowledge, and follows every rebellious devil. For him it is written that whoever takes him for a friend, he will lead him astray and conduct him to the chastisement of the burning fire. O people, if you are in doubt about the resurrection, then surely we created you from dust, then from a small life germ, then from a clot, then from a lump of flesh, complete in make and incomplete, that we may make clear to you. And we cause what we please to remain in the womb till an appointed time. Then we bring you forth. Nothing. And thou seest the earth barren, but when we send down their own water, it stirs and swells and bring forth a beautiful growth of every kind. That is because Allah, He is the truth, and He gives life to the dead, and He is possessor of power over all things. And I'm going to go to 22, section 2. And among men is he who serves Allah, standing on the verge, so that if good befalls him, he is satisfied therewith. But if a trial afflicts him, he turns back headlong. He loses this world and the hereafter. That is a manifest loss. He calls besides Allah on that which harms him not, nor benefits him. That is straying far. He calls on him who harms is nearer than his benefit. Certainly an evil guardian and an evil associate. Surely Allah calls those who believe and do good deeds to enter gardens wherein flow rivers. Allah indeed does what He pleases. That's the Bible, family. All right, Hank, you can bring whoever. How many you got on, Hank?
Just one.
Okay, you can bring them on.
Okay.
Oh, this is a he or she may want them.
All right. Let me just move the banner. Yeah, we just finished doing a show, Professor Bay. We did a hot show.
Oh, you did
talking
a hot
about
one?
Tantra.
Oh, we gonna make this even hotter.
Uh-oh. Buckle your seatbelt, family. You heard it firsthand.
Oh yeah.
Okay, this is Kareem Bay. Unmute your phone. Unmute your mic, brother. Do your thing, brother. What you got to share with us?
Hi. Can you hear me?
Yeah, man, we hear you loud and clear. Let me put you inside of a chenille, also known as a cartouche, so that you can take a photo later. Make it look sharp there for you, brother. How's that look?
Oh, gotcha. Looks good. Good.
Go ahead and make your test. Go ahead and testify.
Me on the show. And thank you.
Yeah, he breaking up some, brother.
Said thank you for having me on the show. Thank you, Professor Bay, for inviting me.
You're welcome, sir. And we
Can
can
you
make
hear
it a
me a
little
little better
clearer.
now?
Yeah, that's better, bro.
Oh man, there's a delay.
He's
I
got
don't know.
he's got a. Are
Uh,
you using direct stream or you got a good internet connection? He's working out his internet connection, Professor.
Okay. We'll give him a few
I'm.
minutes.
Take your time, brother.
Uh,
Now this might be a good time for me to go get some tea.
okay. All right. Can you hear me now?
Yeah, that's better.
Okay. So I'll be short since my connection is a little janky.
We can hear you great.
I'll just say working with Mr. Bay has been, yeah, but it's a delay. So I'll just anyway. Working with Professor Bay, it's been pretty it's been a very pleasant experience. The other day I called him, I let him know forward with the process to get my 9-8 number. So he sent me the form and told me to study it. So I did that, waited a few days, I called him back, let him know I'm ready to, go ahead and practice so I can call the IRS it is. So we went over it a few times. Like people said before, he does go over it with you. You do get a good chance to practice what you're going to say. So once you're ready to make the phone call, it's a walk in the park. So over it a few times. Um, I called him the next day just to get one more time, get a couple more tries at it, practice with me again. Then I just went ahead and made the call, and I had to try only twice. First time I called, they didn't, they said they were busy or whatever. So Mr. Bay gave me another number, so I called the other number. Probably about an hour, 15 minutes to get on, but I knew it was going to take time, so I made time. I was relaxing, I was chilling. So by the time I got on, um, the lady, she began asking me different questions. Like I said, it was a walk in the park working with Mr. Bay. Um, I don't know if I broke a record or anything, but an hour and 30 minutes in, I got my 9-8 number. It was nothing. I had no resistance at
Praise
all. She
be.
didn't even ask me all the questions. So, like I said, it's been a pretty pleasant. Yeah,
You still there, brother? Kareem? Yeah, his connection, Professor, is breaking up.
Okay, well,
yeah,
that
I'm
was
still
good.
here.
He got in.
Okay. You know what I'm thinking? Um, Brother Kareem, let's see if we can how we could do this. Um, Professor, how about if he call you and you bring him back and he could talk through your connection so that we could get it nice and clear? Because this is crucial, a beautiful testimony.
So you wanted to call me?
Yeah. Brother Kareem, if you could hear us, could you call Professor Bay and then I'll connect the Professor Bay, you bring him on your uh, connection and then we can hear it through the voice so that,
Okay.
okay.
All right.
So, Brother Kareem, please call Professor Bay at this time. All
We
right.
give him a few minutes and see what he's going to do. And
Yeah.
if not, we'll move on with the show.
Mm-hmm.
Nobody else has come on there, right?
That's it, bro.
Okay. Give it a minute or two. Let me see if he's going to call.
And if you can hear me, Brother Kareem, you're still live. Just call Professor Bay. Drop this call, this connection, and call Professor Bay. And he'll bring you so you can have your voice on the show because your testimony was rich. And we're waiting to hear some more.
Let me see something. See, if I call him, it would be the same, wouldn't it?
You could do that too.
Let me see something. Hold on.
Yeah. Hold on, family. You know, sometimes we have these little technical difficulties, these little challenges. So, Professor's making the connection with them. And we're waiting for Professor to come back with
Brother Hank, you there?
yeah.
So he's on.
Okay.
All right, can you hear me better now?
Oh, that's excellent. That's excellent. Do your thing, brother.
Okay. Hold on one second. Let me get off of this screen. Okay.
There you go.
Like I said before, working with Mr. Bay it's been a smooth experience. From the first time I called him, he got back to me almost immediately. Up until now, I feel like I went through enough practice with Mr. Bay, listening to the different broadcasts over the last few months. Got enough information that I was sure that Mr. Bay was definitely the guy I needed to talk to as far as getting my state in order. So, you know, doing this it's been fun. It really has been fun. I'm not even gonna lie. So, like I said, I don't know if I broke a record or anything, but I got my 9-8 number very fast. And it took maybe an hour and a half before I was able to get it on the first try. So, you know, anything is possible. Anything is possible. I think whatever you want to do, financially, spiritually, or whatever, I think now is the time that people really gotta, you know, get serious about getting their stuff together. So, like I said, thank you for having me on the show. It's been great. I hope to be able to come back soon and talk more about it.
Right on, brother. Appreciate you, man.
Well, thank you, sir. Appreciate you coming on too, brother. Okay. Yes, sir. Thank you. Thank you. Thank you. You all have a good one.
All right.
You're
now.
welcome. Thank
Bless.
you too. Peace.
Okay, Professor. Family, we're working out the technical we're working out the technical things. So the display of Professor Bay is the best I could do at present, but I want you to be able to read as Mr. Bay gives me the cadence as far as the call on which page to start with. So this one here it's not in numeric order, so I have to go through them. Here it is, Professor. I got homeowner mortgage fraud exposed. Page 1 is up on. It's up on. And as you go through that, I'm going to go grab some tea because my mouth is getting a little dry.
Don't be long.
No, I know where the tea's at. I'll be right back. Yep.
Okay, thank you.
Hold on 1 second. Wait. Let me just get myself out of this chair. So cut the time down. Do your thing, brother.
Thank you, sir. All right, family. Once again, as I told you all, we're going to have another great show. And actually, this is part 3. I think this is going to be the final part. But I want you all to listen intensely to what's being said to you. And I want you all to try to understand what I'm trying to convey to your minds. You all are on a journey. You're trying to get your freedom, get that 40 acre and a mule that we were always promised. And so this is the journey we want to continue on. Now this says we're still into none dare call it conspiracy. Homeowners mortgage fraud exposed. Now, just stay right there on page 1 because I'm going to say this to you all. Now, with this mortgage stuff. I think I told you all this in an early show. You know, like 700 years ago, there was no such thing as mortgage or titles to property. Mortgage and titles are used as weapon of warfare. I told you all that. On you to steal what's rightfully belongs to you, which is the land and your property. When the Europeans say those people of color, they are hiding and do not want to acknowledge your national identity. There is no national identity as African American, black, colored, or Negro. You all got to understand that. There is no such titles or any protection in those titles. Now, in our ancient system, the way we got land was through marrying a woman through inheritance. That's true. The ideal of Europeans was to buy and sell land. In our ancient tradition, there was no such thing as buying and selling land. This should now make sense to you about having a so-called mortgage. You see, if you have your land with no taxes, titles, or deed on it, you just live freely like a bird. But now they have you under deed, title, insurance, and tax, which all this makes you and I indentured servant. The word deed in itself means indentured servant, or performance like a good deed. And that performance means property, tax, pay water bill, light bill, cable bill, phone bill, which are transmitting utilities. Okay? And we're also talking about our titles of nobility, which cannot be granted or consented by the Congress, which means we don't need their consent. Okay? Now, let's get started. I said to you in Modern Money Mechanics, and that book is from the Federal Reserve Bank of Chicago. This is coming from the master's mouth. What they do when they make loans is to accept promissory notes in exchange for credits to the borrower's transaction accounts. Y'all, let me just explain what that means there. When they issued you the promissory note, it was in exchange for your credit. So meaning you were giving them a loan rather than they giving you a loan. That's why it says in exchange for something, meaning I'm going to issue something in exchange for something, in exchange for your credits to the borrower's transaction account. That's talking about your account. See, even though they gave you the promissory note, but when you filled it out and gave it back to them, you were issuing them the promissory note, and they were going to go and pull from your credit. The promissory note became an asset to the bank, and the bank recorded it as such. This is why your house was paid off, because the mortgage and the promissory note cannot separate from each other. But we'll get on into it as we go. You no longer own the note because your transaction had become a promise to pay. Now, the trustee for this trust, he is the provider for the pooling and servicing agreement. This is what he has to manage and follow the Security and Exchange Commission rules. In the pooling servicing agreement, there is a clause in there that says, if you default on your mortgage, the bank can enter into an insurance contract with the title insurance company. See, title insurance company. The title insurance company is the insurer. I want y'all to pay attention to that now. They are the insurer of the note. So the title insurance company will pay off the mortgage to the trust and not you. That's the separation. So if the note is following the mortgage, because the note secures the mortgage, so once the debt is paid with the note, then the mortgage is null and void now. It's paid for. But this is called credit default swap. See, when they say you default. When you got in trouble with the mortgage, fell behind in your payments, or lost your job, you tried to contact the bank. The bank gave you the runaround. You were probably told, we can't help you until that 90th day, until 90 days late. Well, guess what happened on the 91st day? I went over with you all this last time, but I want to reiterate this. On that 91st day, the insurance policy that the trustee entered into with the title insurance company triggered a payoff. The trust received the total amount of the note. This is a trust now. Regardless of how much you paid on your mortgage, it doesn't matter how much you paid on your mortgage. You see, the mortgage had nothing to do with the house. That's what you all was thinking. So what you issued them was a mortgage-backed security secured by a promissory note. So if the note was insured, see it right here, for $400,000, the trust got $400,000 regardless of the length of time you paid into the mortgage. We're on page 2, man?
Okay, hold on, brother. I'm right here. I got my tea, waiting for the cue. I'm going to pull it up right now.
Page 2. I'm sorry, family.
Hold on.
That's my fault.
Oh, that's okay. Pulling it up. Let me find page 2. This is 13, 11, 13. That's 9. Bear with me, family. I got it here. I just got them a little mixed up. 4, 6, 4, 2. 2's posted. Okay, family, we're on page 2. Go ahead, Professor.
Thank you, sir. So I'm going to repeat something here.
Mm-hmm.
On day 91, the insurance policy that the trustee entered into with the title insurance company triggered a payoff. The trust received the total amount of the note regardless of how much you paid on your mortgage. So they didn't care how much you paid because your mortgage, you see, the last mortgage, as I said, had nothing to do with the house. Had nothing to do with the house. So, if the note was insured for $400,000, the trust got $400,000 regardless of the length of time you paid into the mortgage. However, here is the mystery. The Federal Reserve allowed the trust to leverage that $400,000 30 times. Actually, the first time is 10 times. And then they go back to the Treasury window and do it 30 times. So the first time, if they time it 10 times, they're getting like $4 million. And this time, they're doing it 30 times, which gets them $12 million. So let's look at that. So a total that they have is $16 million. Plus what you've been paying, the length of time you've been paying into that mortgage, they're getting over like the fatty cat. They created 30 different levels in defrauding you. Now, your $400,000 note is purchased by other lenders. Probably you all didn't know that. The insurance company is AIG. This is the title insurance company. They paid off the note when it became 91 days late. So, at this point, who lost any money? No one except the title insurance company called AIG. And these are the one who actually allegedly is trying to foreclose on you. But you all think it's the actual bank. Remember, they cut a deal together. The title company and the bank, because the bank gave them the note to secure it. In case you defaulted, they was going to go and get a payout. So it's the title company that is coming after you all to do foreclosures and not truly the bank. Now, someone is attempting to foreclose on you, which is the so-called original lender you started out with, which is the bank. They are going to attempt to foreclose on you. or the trust will attempt to foreclose on you. You must fully understand there is no skin in the game for them because everyone has paid their healthy commission. And they have been successful at knowing how to steal houses. This is why you have to be into trust, because there are thieves out there and cutthroats. In the foreclosure arena, it is called the field of litigation. The only players are the consumers who have enough money to pay an attorney and the court system. Now, Hank, we on page 3.
Page 3. All right, let me pull it up. I think I saw page 3. Family, bear with me. I'm just doing the numbers game to find number 3 because it's not in numeric order. Let me see. Here's number 3. Number 3's up on the screen.
Thank you, sir.
Yep.
Now, in the foreclosure arena, it is called the field of litigation. The only players are the consumers who have enough money to pay an attorney and the court system. Now, this right here, I want you all to pay a close attention to. MERS. Please, family, listen up. Good. What is MERS? The Mortgage Electronic Registration System is a database created by the mortgage banking industry. Do y'all see who created that? You see how they always keep one up on us. They created MERS, the mortgage banking industry. But you got to ask yourself, why did they do that? And what is MERS all about? Okay, we're going to find out tonight. A confidential electronic registry of mortgages originated in the United States. See that corporation again, the United States. It keeps track of transfers of and modification to servicing rights and ownership of the loans. It is used by the real estate finance industry for residential and commercial mortgage loan recording, trading. Furthermore, it is a private shell corporation. Bet you all didn't know that. That is a private shell corporation. And you all know what shell corporations are. But I'm going to break it on down for you. You don't have to worry about it. What is a shell corporation? Listen up. It is a corporation without active business, operations, or significant assets. Did y'all hear that?
Yeah.
This is MERS. This is MERS. So in other words, MERS is a corporation without active business operation or significant assets. This is why they hide it from you. These types of corporations are not all necessarily illegal, but they are sometimes used illegitimately, such as to disguise. See that word disguise means to hide. Let's see what that word actually means. Disguise means to mask, costume, camouflage, masquerade, cover, cloak, concealing outfit, cover up. This is what they're doing. Such as to disguise business ownership. Look at it now. Business ownership from law enforcement or the public, which is you. They're trying to hide business ownership from you, the public. Hope y'all paying attention. I told you it's going to be good tonight. This is what MERS is doing in the mortgage business of banking. MERS is a privately held company that manages the database and is approved by such government-sponsored enterprises. Now, you all going to get a chance to know what these enterprises are. MERS, at the closing table, becomes the nominee lender. Keep that in mind now, nominee lender. Let's look that word up, nominee lender. You know, you all should look these words up. Nominee means a candidate, contender, applicant. So see, they are applicant lender on behalf of somebody else. They take possession of the mortgage electronically, but not the hard copy. Y'all hear that? They don't take the hard copy. They take it electronically. Hey, go to page 4.
Okay, brother.
Because it's getting good.
Getting good. Getting good like it
Always
should.
getting good.
Okay. All right. Let me look for 4 now. Just 2. There it is. 4 is up with red letters.
Thank you, my brother Hank.
Yeah, man. Yeah, man. Yeah, man.
MERS theory is by being the nominee lender, the applicant, and possession of the mortgage electronically, they believe that the note follows the mortgage, which it does not. And they have the authority because it is in their registry. You see? They claim since we registered it electronically, then, it's followed the mortgage and they have that authority. This is what they allege. Now, MERS is being traded on the stock market. Did y'all know that? Remember, it's a private corporation. It's a shell corporation. So, of course, it's being traded on the stock market. MERS is registering your mortgage and property as an asset on the Wall Street stock market. Did y'all, aren't y'all thinking what's wrong with that picture? That means all of y'all houses are on the stock market. Trading, that is. That's what that means. And if you had somebody with the Series 7 license, they can pull it up and show it to you. But they have to keep that confidence or they lose their license. Now, the original mortgage lender is called loan originator. Loan originator must have a loan originator bond. That's the bank. The loan itself and the loan originator have the bond. Have to be bonded. They have to be bonded. Why? If that particular vehicle has any form of disparagement or slander on your title, you have the right to bring a claim against the loan originator bond because the title has been corrupt. What am I saying to you? The title company is the insurance company holding the position as nominee lender with an invested interest by insuring an unsecured bond on behalf of the lender. Y'all keep that word in mind. They are insuring an unsecured bond. Keep that word unsecured bond in mind. The broker is originating the mortgage as a lender. Loan origination is the term used to describe the process that occurs when a buyer obtains a mortgage loan from a lender. Page 5, Hank.
Okay, brother.
Thank you, sir.
Hold on. Let's see. Bear with me, family. Page 5.
Oh, they battle with it. They want this info.
That's 7, 3, 2, 11, 13. Oh, wait a second. I got page 5 down. I think I got page 5 down here. That's page 8, 7, 12, 9, 10, 13, 11, 13, 3, 2, 4, 6. I can't even find it, Professor. Wait. That's 14, page 14. Go ahead, Professor. I don't know where I misplaced it. I think I might have missed it, but go ahead and read it. Family, listen close. We got most of the information posted. Please continue, Professor.
Page number 5. It involves several stages, starting with the loan application by the borrower. The submission of, if you find it, ain't just posted.
Gotcha.
The submission of appropriate documentation, the lender assessment of the application, and the final granting of the loan. However, the United States Supreme Court in 1872 said, this is what their quote is, if the note and the mortgage are separated because one secures the other, if they are separated, then they are null and void. Did you all hear that? This is y'all remedy right here. If they are separated, they are become null and void. Now, to simplify it, for example, you are going to purchase a car. You are not going to give me the check until I release the title. See? That's an example of what I just said. The key to the car is one thing, but the title is another thing. Merce took possession of the mortgage, but could not take possession of the note because the Kansas City Supreme Court ruled that Merce is not a lender. Did y'all hear that? Remember you saying early that they have the authority, that they claim the note, mortgage? It didn't separate. No, that's not what the Kansas City Supreme Court ruled on. They say Merce is not a lender. Merce was not the lender, did not extend any credit, and is nothing more than an electronic tracking entity. Does that word entity sounds familiar to you all? They are an entity. The deed of trust only states that borrower understands and agrees that MERS was a nominee of the lenders, not that the lenders themselves granted MERS authority. Nominee is subject to more than one interpretation based on the context of its use. Landmark National Bank 216P.3D at 166. This is what it says. While nominee may mean agent, another definition is the one discussed above. Go to page 6, Hank.
Okay, hold on. Page 6.
You never found 5?
Yeah, I was looking for it just then. Got 6. 6 is posted right now.
All right, thank you, sir.
Mm-hmm.
Page 6. A party who holds bare legal title for the benefit of others or who receives and distributes funds for the benefit of others, called nominee according to Black's Law Dictionary at 1149. This definition does not necessitate an agent's principal relationship as a matter of law. With that being said, your loan was bifurcated as a legal word. Now, according to Investopedia, bifurcation is the splitting of a large whole or main body into 2 smaller and separate units. In other words, that's talking about the mortgage and the note. This also means your loan was void at the closing. You did not know that. This further means your title of chain was broken. What am I saying to you? What am I saying to you again? What is chain of title? The term chain of title refers to the history of ownership of a piece of property. Titles are normally registered for land and real estate, personal property, such as a vehicle or a business. Titles are normally registered and maintained with a centralized registry or authoritative body. Chain of title traces the historical transfer of ownership from the current owner back to the original owner. This should sound familiar to you all. This is what you all are doing when you take that property and you put it into the trust. You're giving it over to the new owner. You're no longer the current owner who owns the property. The new owner. It's best to give it over to the trust is because that is your protection. It protects your property. Keeping rigorous and accurate title records is important in order to establish ownership of property or an asset. Go to number 7, Hank.
7 or 8? 7. 7's posted.
Thank you, sir.
And I found number 5.
Now,
I'll have that ready in a minute.
You found number 5.
Yeah.
Okay. Your note was paid in full when the credit default swap was triggered. Did you all hear me? When I told you on that 91st day, it was triggered. That means the note was paid in full. So if the note was paid, now let me read on. Well, if the note was paid off, then who is damaged? Nobody. The only logical people with a claim to that house would be the title insurance company who paid off the claim to the original lender, the bank, when credit default swap was triggered. So the title insurance company is the only one really have the vested interest. Because now they had to pay the bank the money that they took an insurance policy out in case you default. So it appears to you that the original lender is coming to you, who really lent you nothing, but actually it's that title insurance company. You see? Let me tell you how that's true. Because the lady in Oklahoma, I had her to go to the title company. And I told her to tell the title company that they needed the transfer sheet to transfer her property, her land, from the current owner to the new owner, which was her husband, and her, who was the current owner on the warranty deed. So she went there and asked the lady what I told her to ask her. So the lady asked her, well, what is the name of the trust, ma'am? She told her the name of the trust, and the lady looked it up. This is at the title company now. And she looked it up in the computer, and plus, she was going there to pay some fees with a money order. She had a money order, she told me. So when the lady looked it up, she told her, ma'am, all of your titles have been transferred over into your trust. This is what the lady at the title company told her. I proceeded to ask her, I say, do you know what that means? That now means that you have the allodial title to all of your property that you have into that trust. And the title insurance could not take it from you is because, number one, they were never the original lender. So this is why she had to tell her that. So they had to now eat that is because now you took that house and put it into a trust. I told you the mortgage had nothing to do with the house. Everybody is hobnobbing, making money off your and my ignorance. This is why the lady told her what she told her. I say, do you know why she told you that? It's because when I came there to your state and we went to your county and we filed all your documents, your warranty deed, your declaration, your trust minutes, your transfer of the property, everything, we filed it. That's what the lady was talking about. That's why she told you it was already transferred, because of what you and I did when we went down to the county recorder's office. I hope y'all are following. In the foreclosure arena, the insurance company is trying to minimize loss. See right there? They're trying to minimize their loss. If AIG, who's the title insurance company, paid off all certificate holders, then AIG would have a claim to the house, except AIG insured unsecured notes. Remember I told y'all about that word earlier, unsecured notes. Now y'all finna get to the nitty gritty of what unsecured notes are. Remember, at the closing table, MERS became nominee lender that separated the note from the mortgage. And the United States Supreme Court said if they are separated, they are both null and void, bifurcated. Now, AIG, which is the title insurance company, insured unsecured notes because the note was never accompanied by the mortgage or vice versa. See, it wasn't never accompanied by any mortgage. It was they insured unsecured notes. Therefore, AIG had no claim on record for the house. This is your remedy. This is what I was just telling you, what I had the lady to do in Oklahoma. This is why the lady at the title company had to tell her what she told her. Ma'am, your titles has already been transferred. I hope you all follow that. Now, let's get into what is an unsecured note. Unsecured notes are similar to debentures, but offers a higher rate of return. Unsecured notes provide less security than a debenture. Such notes are also often uninsured and subordinate. The note is structured for a fixed period. I'll hear that. An unsecured note is basically a debt instrument. Oh man, look at that. So they was securing unsecured debt instruments, or a loan that is not secured, covered by collateral. It is used as a way to obtain a loan. Acting, see that word, acting as a protection against potential loss for the lender should the borrower default in his payments. Did y'all hear that? That's why I tell you all the banks never lose. Hank, bring on page 8.
I got 5 ready too.
Okay, well then let's go back to 5.
Okay, hold on,
When
family.
they got 5 ready, then Hank, when they go back and look at it, they'll see 5.
Yeah, okay, I'm putting up 5 now. This is 5, family. Just so that you can go back to it.
Good.
Open up big screen so you can read it well. If the lettering is too small, family, always go big screen on your desktop and you can read the information. All right? Okay, Professor, you want to go to which page?
8.
8. All right.
Page 8.
Okay, hold on. Let me see where I have 8 at. Let me see.
Keep in mind, family, about the unsecured note that they insured.
8
Title.
is now up. We got 8 up.
Thank you, sir. Thank you.
Yep.
Now, pay attention, family. An unsecured note is typically a corporate debt obligation. What y'all think that means? Look at Title 18 USC 8. Matter of fact, let me go there and pull it up for you. And I'm going to tell you what it means. I want y'all to pay attention tonight because I'm giving y'all some juice over here. Title 18 USC 8. Now, just follow along with me. It's getting good. Now, I said an unsecured note is typically a corporate debt obligation. And then I told you all to look at Title 18 USC 8. Now check out what it says. This is in Legal Law Institute, LII. 18 USC Code 8. Obligation or other security. Remember, your promissory note is a security of the United States defined. The term obligation or other security of the United States includes all bonds, certificate of indebtedness, national bank currency, Federal Reserve notes, Federal Reserve bank notes, coupons, United States notes, Treasury notes, gold certificates, silver certificates, fractional notes, certificate of deposits, bills, checks, or drafts for money drawn by or upon authorized officers of the United States. So in other words, MERS is acting as an authorized officer of the United States. This is why they are tracking the mortgages and they are claiming that they're getting the mortgages electronically. Don't y'all see the fraud in it? Come on, follow along with me. I told you it was going to be a good one. Now, when y'all get a chance, go look up Title 18 USC 8. It's different from debenture. Unsecured corporate debt that often have insurance policies to pay out in case of a default. There it is right there. I told you. The bank, the so-called lender, takes out an insurance policy in case you default. Once you default, you have to let it ride it out for 90 days. After the 91st day, it's going to trigger. And this is what the insurance company go and get the money from the insurance company, AIG, which is title insurance company, to pay out in case of the default. I hope y'all follow me. Companies sell, looking at it now. This is debt. Companies sell the unsecured note through private placement to raise money for purchases, share buybacks, and other corporate purposes. Because y'all know the United States is a corporation anyway, a broke corporation. In a private placement, both the offering and sale of debt, look at that, selling debt or equity securities is made between a business, look at it now, or issuer. This is you. Because you issued them a security, which was the promissory note, and a select number of investors. And the bank was the so-called investor that came and got the promissory note. You issued the bank a security paid in full. Oh, you all don't hear me. In contract, here's the secured note. Now listen to what it says. In contrast, a secured note is a loan backed by borrower's asset. Look at it. Your asset again. Your account. Remember, I read it to you earlier. When the banks borrow the promissory note, they borrow from the borrower's asset from your account, such as mortgage or auto loan. The bank does an assessment of your assets for $400,000, but do not report it to the IRS. The only time they're going to report it to the IRS is when you default on them. Boy, they got some slick stuff for you, ain't they? So they supposed to report that is because that's your credit that you giving the bank a loan. That's why they supposed to report it to the Internal Revenue Service. But they're only going to report it until you default, which means you stop making the payment. Now they're going to support it to the IRS, and guess what they're going to do? They're going to do a 1099 OID and say that they issued them $400,000. Hope y'all get my point. If the borrower default, these assets will go toward the repayment of the note. You see? But they already sold your credit. This is the bank stealing your credit and acting if they gave you a promissory note. You gave them a promissory note that was paid your house off in full. I don't care if you don't believe what I'm saying to you. I'm telling you what I know. Now, you issued the bank a promissory note called a security. And the bank accepted your promissory note. Remember I read this to you all early? In exchange for something. For your credit to the borrower's transaction account. Your credit. This is how it was paid off. Because it was your credit initially when you filled out that promissory note and slid it back to the bank at closing time. And they went on the private side and got money from your account. This is according to Modern Money Mechanics, Federal Reserve Bank of Chicago. So you know I ain't making it up. For this reason, collateral assets must be worth at least as much as the note. So you see, additional examples of collateral that can be pledged into stocks, bonds, jewelry, and artwork. MERS. Hank, go ahead on be bringing up 9.
Okay.
MERS, which also refers to the privately held company that manages the database. They don't only manage the database, they're a shell corporation. They don't have no activity. Is approved by such government-sponsored enterprises. Now I'm going to show you who those enterprises are. And you all going to be shocked to know who some of them are.
9 is up.
Thank you, Brother Hank.
Mm-hmm.
9. These enterprises are Federal National Mortgage Association, Fannie Mae, the Federal Home Loan Mortgage Corporation, Freddie Mac, and the Government National Mortgage Association, Ginnie Mae, along with such government agencies as the Federal Housing Administration, FHA, and the Department of Veterans Administration, the VA, that are involved in housing loans. The California and Utah Housing Finance Agencies and all major Wall Street rating agencies make use of it as well. So you see all the enterprises? All of them sleep in the same bed together. When one scratch for the fleas, the other scratch. Mortgage Electronic Registration System, MERS, is a privately owned database that the mortgage banking industry created to simplify registration and transfer of the mortgage. No, they want to curtail that fraud. Now, by tracking mortgages transferred electronically, MERS eliminated the need of a lender to register. Look at it now. This is where they're hiding the fraud. To register the transfer with the county recorders every time the loan is sold from one bank to another. This is what you call your new services. They can't go over 5 years. They got to give it over to a new servicer. It's almost like passing around a whore from man to man. I hate to put it that bluntly to you, but this is what it is. Everybody getting a chance to eat off you. And they don't want to register it in the county because then when they register it in the county, that's public record. The MERS system is used by mortgage originators, servicers, see that word? Servicers, warehouse lenders, wholesale lenders, retail lenders, document custodians, settlement agents, title companies, insurers, investors, county recorders, even your county is involved, and consumers. See, I highlighted the county recorders. What now? Well, you probably saying, well, dang, Brother Bay, the counties are involved? Yes, they are. But don't you worry about that. Counties and regulators, officials, and homeowners can access MERS free of charge. Homeowners can look up information on their own mortgages that are registered with the system. I wonder how easy were they making that. In order to use the electronic tracking, the servicer of the mortgage assigns it. Now check this out. The servicers of the mortgage assigns it with a mortgage identification number. Look at it now. I told you all of their comments is numbers. And then register the loan with the MERS database. Sometimes MERS, now listen to this right here now. Sometimes MERS itself is designated as the mortgagee. which means the lender, as the original lender is officially called in the mortgage document. They say they're the original lender, but yet they're the nominee lender, not the original. Such a loan is known as an original mortgagee loan. In other words, they're saying that they gave you a loan, which is a lie, because they are a shell corporation with no business activity. From there, the seller can originate the mortgage with MERS as a nominee of the lender, also referred to as the beneficiary, and then assign or record the assignment of the loan to MERS in the county land record. This would make MERS the mortgagee of record. They're saying that they're the lender. Mortgagee is the lender. But now, let me explain something to you. Hank, you can pull up number 10.
10.
Go pull up number 10.
10 is up.
Okay, thank you. Important. While MERS can act as mortgagee in county land record, it doesn't actually own the mortgage loan. You see? They can't own it. If the lender sells the loan, MERS will update its information regarding the mortgage. The servicer of a mortgage can have it removed. Look at that. I told you they're always hiding something from you. Remove from the MERS database by sending a request. Only thing they got to do is just send a request to have it deactivated. MERS will, in turn, notify Fannie Mae. Don't y'all see all the fraud here? They ain't got to do but just send in a request saying remove it. If the servicer of a mortgage wants to end their membership, so they even have a membership with MERS. With MERS entirely, it must also notify Fannie Mae as soon as possible. This means a servicer of mortgage are doing business with MERS. That's exactly what it means. Boy, look at here. Now, you and I must understand why your express trust site's jurisdiction is in Taiwan. The lender's agent goes to the county clerk office because the clerk office operates as a citrus trust. The clerk office operates as a citrus trust also, in case you all didn't know that. Now, your express trust can't be regulated by MERS because of its citrus jurisdiction. And MERS does not hold the original copies. They are returned back to you once recorded in the deed of records. So, when you go to your county recorder of deeds, when they file all of your documents in, you get the original ones back. Okay? It don't go to MERS. You get those back because you are going in now as the current owner who gave property over to the new owner, which is the trust, and that gets filed into the county recorder of deeds, and in about 2 weeks they send you those original documents back to you. The abstract is telling you where the trust situs is located. The location of the trust is what makes it situs. This is important for you from going into foreclosure. See, y'all got to understand something. That's why I keep telling you all, stop worrying. Stop worrying if the bank send you the letters. I'm showing you all the game, what they're doing to you if you all can follow along with me. This is why I got to go slow with it with you. See, this is why I do your paperwork a certain way. I put certain words in it because in most of y'all warranty deeds, y'all don't even know they realize got you all listed as a tenant. So you as a tenant for 30 years. So I go and then I change the wording. You are not a joint tenant, you are joint owners or a joint owner. Express trust can do that. That's why it's called an express trust. You're expressing your intent of what you're saying. That is truthful. You're not no damn joint, what's the word I'm looking for? A joint tenant? If that was the case, then you should be able to discover the fraud. So how in the hell, if you got me a joint tenant, how could you say you ever gave me a loan? That doesn't make sense. That's oxymoron. But y'all didn't pay attention to it. That's fraud again. If they got you listed as a tenant in your warranty deed, then they can't say that they gave you a loan. Peep the game. Follow along with me, family. Boys, family. In the warranty deed, the express trust is buying the house from you, the seller. It's your protection. This is why you're giving it over to the express trust, for the trust to own it, to protect it. Where the so-called criminals can't come and foreclose on you. So you can lay down in your bed and sleep comfortably at night. And stop worrying, Mr. Bay, I got a letter from the bank. So what? Stop worrying about what them crooked bankers send you. I'm showing you the fraud here. You just got to get out of your false education and accept it real. That's your fear. That's my definition of what fear is. False education accepted real. Now I'm trying to bust that up. The title is transferred to the express trust as the buyer. And you all remember how you bought it? I expressed it in your trust minutes. I expressed it in the lawful money with the silver coin. That is the lawful money, because the trust can express the lawful money inside of the express trust minutes. That's what you call specific property. Next page, Hank. Page 11.
Okay. Page 11.
I told you all I was going to give it to you raw tonight. So you see all the fraud.
Page 11's posted.
Thank you, Brother Hank.
Mm-hmm.
So y'all hear my passion in it, because that's all I got, all the shit that I done went through. Now pay attention. So, and this is something gonna come back to y'all of why I told y'all needed to do what y'all needed to do. So the trust parties will consist of the trustor, trustee, beneficiaries, and settlor. Them should ring a bell to y'all, because y'all have to have all of these parties in order for it to make it a valid trust, which are all trust parties to the CITES. Trust located in Taipei City, Taiwan. This is your property protection. And guess what else? All of those parties that I just named, trustor, trustee, beneficiaries, settlor, all of you all are parties to the CITES also, so that means you're also foreign, located in Taipei City, Taiwan. So your property is protected, your trustor is protected, your trustee is protected, beneficiaries are protected, and the settlor, which is this grantor, is protected. I hope y'all get that point. When considering a legal location for trust CITES, listen to it now. It is important to bear in mind that CITES laws change continuously. For example, trustee selection often impacts CITES. Did y'all catch that? Let's see what that word impact means. Impact means to crash, collision, shock, bang, blow, force, contact, rock. Now, that means your trustee holds some weight there. Many states determine CITES based on the location of the trustee or the administration of the trust. Now, I told you, when you all go and file it into the clerk's office, that's their CITES there. But that's not your CITES. Now follow me now. Your trustee is foreign to the United States Federal Corporation, Why you thought that I told you all to also make me your trustee? This is part of the reason. The reason for the season. And then also, when you all did your SS4 and you called in to the IRS, you also were a foreign trustee with your new spiritual name. Now, do you all see? Listen, I know this stuff. I didn't say I believe this stuff. I know what I'm telling you. This is why I tell you, you don't need to worry. You're already protected when you put it into the trust. I just read to you, everybody who's in that trust is a party to the trust, to the Citus trust location located in Taipei City, Taiwan. That's why I had you to fill out that SS4 the way I had you to do it. See, you all just sometimes don't understand my moves. That's why I tell you all, I know what I'm doing. Not believe what I'm doing, I know what I'm doing. Big difference from belief. When looking at various factors, careful consideration should be given to the trustee. See it again? Selection and where they are located and will continue to be located. Now listen to this Supreme Court ruling here, Doc. Listen to what they say. Finally, in June 2019, the United States Supreme Court case, North Carolina Department of Revenue versus Kimberly Rice Kessler, 1992 Family Trust. The court ruled that a trust beneficiary's residence in another state no longer establishes enough of a connection for it to tax the trust. Did y'all hear that? More caveat for you. More remedy there. So in other words, let me break it down and explain it to what that's saying. So no matter whether you live in California, Florida, Georgia, Oklahoma, Carolina, it doesn't matter. Because the Supreme Court told you right here, it no longer is established enough of a connection for it to tax the trust. And they can't tax your trust anyway because you're in international jurisdiction. And all of your players in there, all the parties, the trustee, the trustor, the beneficiaries, and the settler, they can't tax you anyway. Now, Carpenter versus Logan, United States Supreme Court, 1872, 83 U.S. 271, 21L, period ED, period 313, 16, Wall, period 271. Now I want you all to pay attention. In this, we see that the Carpenter case was not over a mortgage at all, but rather it was over the delivery of wheat and flour. We now have to ask ourselves, what does wheat and flour have to do with my mortgage? The correct response is nothing at all. And you can go ahead and pull a 12 up.
Okay, hold on.
In many cases, in where the Carpenter has been cited, the justices have held that if anything can be taken from Carpenter, it is that the note and mortgage are inseparable or always together. See, didn't I tell you all?
12 is up.
You can't separate it. Thank you, Hank. You can't separate the note and the mortgage. They must always go together. If they are separated, the house is yours outright. This means that it makes no difference if one party holds the note and a separate party has assignment of the security instrument. This concept is concurrent with contract law. Separate instruments or contracts executed, now listen to it now, separate instruments or contracts executed at the same time for the same purpose, the same transactions are considered as one instrument and are to be read and construed together. In other words, when you sat down at signing, that promissory note and that mortgage must have been together to be read and construed as one entity. You couldn't separate the instruments. If the promise to pay, now listen to it now. If the promise to pay has been stripped, see right here, because this is what they use. They say they gave you a promissory note, and the clause says with a promise to pay. Okay? Now, if the promise to pay had been stripped, separated, or removed, bifurcated from the tangible negotiable instrument, original paper note, which is the promissory note you gave them, and sold to a third-party investor, which that would be the title insurance company, securitized, then there is no longer an apparent debt associated with the paper note. It is now just a piece of paper. In other words, it got rid of your promise to pay it now. See? Because they sold it to a third party, which means that they were separated. And that third party being the title insurance company, remember I told you they were holding the note, they insured an unsecured note. And I told you all the definition of what unsecured note means. Something that doesn't have any backing, no collateral, a debt. Bifurcation of the only element that would have ever given value to the paper note is now gone, and the paper can no longer be used for collection or the claim of rights under the note. So in other words, title company can't come and claim anything, nor the so-called lender, the bank. Neither one. Because the lender, which is the so-called bank, has already gotten the $400,000. Then they went and cashed in when you stopped paying. Then they went to the Federal Reserve when the 10 times it, that was $4 million. Then they went back again 30 times, that was another $12 million. So you see the fraud? Now, the mortgage premise are pledged as security for the debt. Y'all hear what it says? The mortgage premises are pledged as a security for the debt. In other words, the mortgage is what you call the promissory note is essential, and the mortgage is an incident, which means just an activity. But that mortgage has to follow the note. That's why I said the mortgage premise are pledged as security for the debt. In proportion as a remedy is denied, the contract is violated, and the right of the assignee, which is the bank, the lender, are set at naught or nothing or not anything, meaning they don't get SHIT because they frauded you from day one. In other words, the mortgage ceased to be security for a part of the whole of the debt. It expressed provisions to the contrary notwithstanding. So see, once the note fulfilled the obligation, the mortgage became a nullity. It ceased because it can't stand on its own without the promissory note, which is the security. It must stand with the security, which is the promissory note. If it doesn't do that, then it's notwithstanding. Here we go, right here. The note and mortgage are inseparable. And the formal, listen to it now, the formal as essential, meaning it is important. And the latter, the former now, is the note, the promissory note, and the latter as an incident. Let me tell you what that means. That's an event or occurrence. An assignment of the note carries an assignment of the note carries the mortgage with it, while an assignment of the latter alone is nullity. Didn't I tell you? It cannot stand alone without the note. Because the note carries the mortgage. Just like you hear somebody say, man, I'm always carrying that person. I'm carrying him. I got to carry her. I got to carry him. So that's what the note does with the mortgage. It carries it. It must be admitted that there is considerable discrepancy in the authorities upon the question upon consideration. 13, Hank.
Okay. Family, put in your likes. You see the contact information, the banner, Professor Bay, 33169@gmail.com, 786-624-8257. And if you want him to walk you through this step by step, call for a consultation. He customizes your needs at the consultation. All right, moving it up.
Thank you, my
Looking
brother.
for 13. Give me 1 second. All right. That's 10. 1, 12, 11, 13's posted.
Thank you, sir.
Mm-hmm.
Now, the transfer of the note carries with it the security. See right there? Without any formal assignment or delivery or even mention of the latter. Not even to mention the latter, which they're talking about the mortgage itself. If not assignable at law, it is clearly so in equity. When the amount due on the note is ascertained, determined in the foreclosure proceeding, equity recognizes it as conclusive, certain, or final, and decree court has ruled accordingly. Whether the title of the assignee, the lender, is legal or equitable is immaterial. It doesn't matter. The results follows irrespective of that question. The process is only a mode of enforcing a lien. All the authorities agree that the debt is the principal thing and the mortgage an accessory. Look at it now. So in other words, the note holds more weight. And it secures that mortgage. It's only as an accessory. Equity puts the principal and accessory upon footing, balance of equality, and gives to the assignee, which is the lender, of the evidence of the debt, the same right in regards to both. So, in other words, they're saying they're equality. So, when the note paid the debt, then the mortgage followed. Done deal. Closed deal. Bifurcated. There is no departure from any principle of law or equity in reaching this conclusion. There is no analogy, no comparison between this case and one where a chose in action standing alone is sought to be enforced. In other words, you can't force that note on by itself because in there they got in that bond, if the borrower default, we call in the loan and we want the full payment. That's what they're talking about there. On the mortgage. Can't do that. The fallacy, the myth, which lies in overlooking this distinction has misled many able minds and is the source of all confusion that exists. The mortgage can have no separate existence. Did I tell you? When the note is paid, the mortgage expires. Did you see it? See, they was trying to get you with the mortgage saying, oh, you defaulted in your mortgage. No, nigga, no. The mortgage can have no separate existence. When the note is paid, the mortgage expires. It cannot survive for a moment the debt which the note represents. Man, y'all better follow that. That's your remedy right there. This is how you bust them. This dependent and incidental secondary relationship is the controlling consideration. and take the case out of the rule applies to chose in action, where no such relation of dependency exists. 14, Hank.
14. Is that 14? Let me see. Nope, that's not it. Here it is. Oh, that's 5. 14. I got 14 up. Post it.
Thank you, my brother. Thank you, sir. This is it. Going home. Matthews versus Walwyn is usually relied upon by those who maintain the infirmity, frailty of the assignee's title. In that case, the mortgage was given to secure the payment of a non-negotiable bond. You hear that? In that case, the mortgage was given to secure the payment of a non-negotiable bond. Well, you didn't give them a non-negotiable instrument. You gave them a negotiable instrument called the promissory note. The mortgage assigned the bond. The mortgagee, which again is the lender, assigned the bond and mortgaged fraudulently and thereafter received large sum which should have been credited upon the debt. Don't this sound like how the bank scam y'all? So they took that promissory note and didn't want to act like the mortgage doesn't go along with it because the mortgage can't stand alone. So they had to take the promissory note and induce other investors, right? And then take it and packages it and put it on the stock market to trade it. Went all around the world making money. Millions and billions of dollars. And then it came back to the bank. And then yet they still want to try to foreclose on you. You see? The assignee, which is lender, sought to enforce the mortgage for the full amount specified in the bond. See, I told you earlier, this is how they try to do you. But they don't want to say that the promissory note, that the mortgage succumbs to the promissory note, which niggas you had already gotten paid because you pulled from the borrower's credit transaction account. That's what modern money mechanics was telling you. You issued them a promissory note. And whatever that amount was, 400,000, they did an assessment of your assets, which is your credit, that they were supposed to report to the IRS as your credit. And your credit score would have burst through the roof if they ever reported that. But they only want to report when you stop making the payments. And the only reason why you stop making the payments is because you know you got defrauded. They defrauded you. That's why you stop making the payments. Why in the hell am I keep telling you to make the payments when they defrauding you? You don't owe them nothing. So here's all your remedy right here. You can take it or leave it. I'm piping you. This is 31 shows now. So I done gave you more than enough to eat. There's some good food right here. Some good substance. So go and eat up. Mr. Hank?
Man, y'all gonna have to y'all better send him some cash. I'm gonna put these banners up right now. You better cash out our brother, because nobody's dropping it like Professor Bay. Y'all better cash out, put up your likes. Mr. Bay 33169 gmail.com 786-624-8257. Show the brother some love. Hit the like button. Subscribe. Thank you, Professor Bay. This was an incredible show, family. Nope.
Ain't anybody else in the? Nobody else is in?
No more testimonies. That was a hell of a show. That was a 2-hour. He took it all the way to the goal, yes, family. He took it all the way to the goal. Show your love. Cash App, $ Moores 33054, Alfred Thompson. This is graduate studies on how you're being shafted with no grease.
Yes.
This is graduate, family.
Thank you so much, brother, for posting it for me.
You got it. All right, family. Good night, y'all.
Say often, yes,
I am. Supreme shield of protection surrounding me. Yes, I am. Yes, I am remembering all I was born to do. Yes, I am. Take hold of your crystal, which will magnify your I am affirmations at least 600%. If you don't have a pistol, you better have a crystal. Bring forth.
Yes,
I am.
remember,
Lives
you